Hey everyone, it's Fiction Crypto making a quick video because the stuff that I'm seeing in the XRP community is just ridiculous, man. It is like I just don't understand people. I don't understand what their goal is when it comes to investing, and that's not up for my understanding because I honestly don't care to understand how most people think for real, because I know how I'm thinking. But I'm making this video to just show people and that if you bought at a certain point anytime this year, you're not in at a bad price, or you're more than likely in profit. So we're just going to take this starting at January 1st, 2024. I have the market opening price for XRP, which was 62 cents, and I have the market close. This is supposed to say close. Let me change this real quick, which is at 58 cents. Then we have a whip down price of, boom, 48 cents in the same day. So this is when people complain about the price. But this is when investors know when to get into the market. And I want to show you all how easy it is to capitalize off of moves like this. I'm seeing everybody leaving the XRPL. I understand the dev point of view. Everything's not here, the help's not here, but it's a business at the end of the day. And if you come into a business and you don't have the money to facilitate that business, nor the strategy, nor the team, nor the tools, nor the time, the business is going to fail. And you cannot blame Ripple or anyone else for your failures as a business. So I want to attack the business look and outview or outlook or whatever you want to call it, that people are, why I'm going to leave the XRPL. I'm going to leave the XRPL. I'm going to leave the XRPL. First, businesses create something of value. You sell a service or a product, or you have donations given to you to do whatever you want to do with those donations. In the case of the XRPL Foundation, when they were gifted 100 billion XRP tokens, they can do what they wanted to do with those tokens because they were gifted. So they kept half of it and they sold half of it. That's not illegal. Starting there, the business transaction. Secondly, if you are going to be, I'm going to use this example. If I buy a piece of property and I know I don't have the money to renovate it, nor do I have the team to renovate it, demolish it, or do whatever I want to do with it, it's going to be very, very, very difficult to pull money up out of nowhere, out of thin air. It's going to be very difficult to renovate a house without having a construction company, a construction crew, remodeling crew to come in and rebuild and build what I need to build on this area that I needed to be built on top of the area I needed to be built on. It's no different than building on blockchain. The blockchain is an area and you build on top of it. So it's not Ripple's fault that these businesses are failing. Nobody wanted the product. And this is not a diss to any company, because I'm not even a developer. I'm not even I'm going to build on blockchain most definitely. But it's not a diss. It's just business, man. And I'm getting sick and tired of people blaming a company as good as Ripple. It's an amazing company, I believe. That's my opinions, and this is not financial advice. Blaming a company for your failures, or because you don't have enough support, or you can't figure out how to do this, this, and that, and all this. It's not their fault. They're spending $600-700 million on a court case right now versus the SEC. Do you think they care about your project? They don't. That's a cold hard truth. That's a cold hard truth. The XRPL Foundation spent over 100 million XRP tokens, or I don't even if it was $100 million or 100 million XRP tokens. However much it was, is a lot of money. I seen people get grants, and this is my opinion. The grants could have went a whole lot of ways. I did see people who were partnered up and clicked in and stuff like that get grants, yada yada. Who cares? Who cares? Who cares? In business, you need to know somebody to get something done. Or you need to just be or have that service, be that person, be that guy to get in that circle without people knowing you, and they say, I want to invest in this person because I believe in what they're going to do. This is how business works. And most people who are investing into cryptocurrency don't even understand business. They are just seeing, okay, oh my God, Doge went from 0.005 cents to 74 cents. Oh my goodness, let me go ahead and try to get rich. This person just made $1 million. That person made $1 million. I need to make $1 million. And you don't even make $100,000 in real life with your regular job or your business. So it's just absurd. It's crazy to me how people are looking at this asset, this industry, as a get rich overnight, get rich quick scheme. In the charts, in the litigation, the laws, the structure, the infrastructure is literally telling you it takes time. It literally is telling you it takes time. We've been in a bear market for 3 years. But that doesn't mean you couldn't have capitalized off of moves like this. Look at this move. This is a 28% movement in one day. About 25%, 23%. My bad. 5% off. Okay, who cares? 23%. Do you know what hedge funds, investors, the average investor that understands the market, do you know what they would want to do for 23%? A return of 23%? And you get it almost immediately? Look at this. Look at this right here. 17%, 16% in one freaking day. One day. Hours. 17%. 17% in one day. Do you know what people would, a 17% return in one freaking day? That means if I invest $100 right now, I get $17 the next day if, and potentially, it moves in the way that I predict it to move. But this is why you can either trade on both sides. And this is why we have a chart to look at it. And this is why the chart moving, because you got AMMs, you got hedge funds, you got all of these people from around the world can trade on both sides. Who cares that the market is manipulated? Everything is manipulated. The way you think is manipulated because you learned it from someone else. That's manipulation. Who cares? You need to have a strategy on moving your money, on how much money you want to make on how much money can I risk to lose. It's mind-blowing to me. So a lot of people don't like to look at it from a trader's perspective because they know the intrinsic value that this blockchain technology has, and that's perfectly fine. I'm invested in it for the long time for the same reasons. I'm listening to I'm listening to everybody. I'm not even listening to the bad stuff because I'm non-biased. You need to be non-biased when you are investing. So let's go back to the price action on this thing because it just amazes me. Market open 62 cents, which is lower than the price of XRP right now. So if you bought on January 1st, you would be up 1.5% on an investment. 1.8% is still moving around. It was just at 1.5%. Your bank doesn't give you 1% interest. Your bank doesn't give you that. A return, a ROI of 1.5%. Your bank doesn't do that. You're lucky to go get 0.00% in a savings account. Now we know they have CDs and annuities and all these other investment vehicles and all this stuff, high yield savings accounts, all that great stuff. That's great. If you like that type of stuff, great. But most people don't even know about that because they don't even know about money. They don't even know about money. But they're throwing their money at this market and then getting pissed off at a company that's spending close to $1 billion on a freaking court case that is going to pave the way for every other blockchain in America to operate correctly and have a structured, level playing field with legislation and rules to protect people like you that don't know how to invest. So, looking at this chart, man, if you understood and had a theory on how the market works, look at me. I got EMAs on the chart. I know when my EMAs are crossing and a move like this and we don't rebound, look at this, and we don't rebound, we're going down. That's just my theory. And it plays out pretty well. Same on the other side. Before people start investing, stop listening to other people about investing and look at these charts and get an understanding for what this actually means. What this actually means. Because you can then predict, okay, I see the trend of the market. I'm not going to believe my crazy beliefs that XRP is going to $11 right now, which I hope one day it will, and I do believe that it will. I do. I believe it'll be worth more than that because of the money that it will be facilitating over the next 10 to 15 years. And that is another part of this. People are looking at this thing for a get rich overnight thing, and they are not even calculating a strategy or even thinking about what is going to happen in the next 10 to 15 years. Do you think we are going back? Do you think they're going to just say, this blockchain technology is not what we want to use? Even though we've been talking about tokenizing everything in the freaking world, we're just not going to use it. Do you think in 10 to 15 years, the XRP ledger is not going to be in use? Or some part of it? The protocol, even the protocol. Do you think that's not going to be in use? Now, this is the part where I am going to go over a simple investment strategy so people can calm the heck down and understand what they're actually doing, looking at, getting into before you lose $5 and then want to go file a SEC complaint against Ripple that has nothing to do with this market trading freely, has nothing to do with the market trading freely at all. This is a free market. It may be manipulated, so if you want to say it's not free, who cares? That's the thing. You all are focused and worried on the wrong things instead of learning how to maneuver through a manipulated market. It's manipulated for a reason. That's why we have trends and swings, price action and movements, highs and lows, openings and closing, weekly highs, monthly highs, daily highs, 5-minute highs and lows on the same thing. So, just let's take it from this one candle right here. Look at this. Look how liquidity, which is in the wicks, this is where all the money is at, because it's not just dumping for no reason. They're coming back to, look at the zones, man. Look at the zones. Look at this. Look at where all of this liquidity is lying down here. You think the banks is not about to come back here and get the rest of the money and get the rest of the sales, or the buys at this level, when this is a clear level for support? And what's even crazier to me is that this is a great sign of a strong, resilient market for this token. Boom, bounced off the resistance right here. Bounced off the support, and instantly in one day, 17% just in the wick, not the whole candle, just in the wick. So let's come up with an investment strategy for you all, because it's not that hard to just like go on YouTube and say, I don't even know how to invest for real. Can I come up with what is an investment strategy? It's like ChatGPT does exist. YouTube does exist. Google does exist. And I don't want to make it seem like I'm talking down on anyone, but you're going to have to get out your feelings, because somebody needs to talk to you like this, man. Because the people that are losing their mind, like people are literally losing their mind. I'm seeing people talking about offing themselves because the price movement of XRP is not moving. Like, you are literally insane. You're literally insane, because this token is not moving. You don't put all your eggs in one basket. So we're going to use an example of a person having only $200 in savings. Okay? And we're going to say that this person has all their bills paid and they don't have to worry about bills. We're not going to worry about food or nothing like that. All that stuff is taken care of. So you have $200 to invest. I'm a first-time investor. First, I want to get into the mindset that this $200 that I'm going to invest, I don't need it at all. It's like I'm going to the store and playing a lottery. Once you realize that you're going to the store or in a casino to play lottery, to play the casino games that they play, gamble, and sports bet. You all sports bet. You don't complain about losing on sports bet, and that's even more fixed than this. And I'm sorry I got these police, what is this, fire truck back here, so it's kind of loud all the time. But nobody complains about losing money in sports betting. But people are complaining about, and it's the same people on the XRP ledger. You don't complain about sports bet losses, but you complain about this token not moving or you not getting in at the right time. So let's assume that I have $200 and I can risk to lose this money. I don't need it at all. Okay, now I want to invest on January 1st, which the price of this token opened up at 62 cents. But me being a first time investor, I'm like, with doing all my research, the entry point for me is high. So where do I want the market to come down to, or even go up to invest? Where do you feel confident in investing? What price point? So this is my small strategy. And let's see. Alt J. Let me grab one of these joints. Say we wanted to get this at a 10% discount from, or let's not use 10%. Let's just say 5% because it's only 23% movement. 5%. We want to get this token at a 5% discount right here, which means instead of buying at 62 cents, we are waiting for XRP to depreciate down to about 59 cents, which is a 5% discount or depreciation in the value of this asset. Now I got 200 bucks. So now what I'm going to do is I'm going to have my plan and I'm going to invest 30 bucks right here. Boom. So I got $30 worth of XRP at a 5% discount. Now what that means is I have $170 left that I can risk to lose. Now I'm going to want to wait for the market to drop another 5% before I throw some more money in there. So let's go down another 5%. Boom. Okay, so this means, and you see that's at 5.5%. Great. No big difference. This means that from the initial time that I've been watching this, now we're at a 10% discount on the investment that I want to invest in. Boom. So at this point, let's go ahead and add a little bit more, assuming that we don't care if the price goes to zero, because we know we're investing, which means we're risking our money to make more money, but at the same time, the risk that we take, we can lose it all, because you're essentially gambling. Boom. And that's why some people make it out and some people don't. So now from the initial point that I have, I got a better price at 10%. So I want to throw them $50 in the market now. Boom. At 10%. Now you got even more XRP for 30 bucks and then plus the $20. So that's $80 right here. Boom. This XRP at this level is cheaper than this XRP at this level. That's what that means. Simple. Simple. Okay. Now, my strategy, and this is the strategy. I'm literally explaining the strategy to invest. And it's always other strategies. This is just something that I use. It's not always right. And that's a part of investing. You can't literally be like, oh, I was right. You don't know what's going to happen. I'm just doing risk to reward, and I can risk losing some money. Boom. So now, this is at another 5% discount. So starting from the top to right here, from 62 cents, now we are at a 15% discount, and the token is now worth 53 cents. This is cheaper than this price, and this is the cheapest price that we have it so far. So what I'm going to do is invest a little bit more. 50. Let's see. Let's do 50 again. Okay. Or we can do 60. We can do 60. So 30, 50, that's 80, plus 60 is 140. Now let me move this up. This price of XRP that you got was $60 is cheaper than all the other investments that you got. Boom, boom, boom. Now, okay, my final part of my investment strategy is getting a discount of 20 to 23%. And let's just happen to say that you were on top of your investment because you really, really, really wanted this to work for you. And now we catch this at the full 23% discount that it offered us an opportunity to buy in the market. And let's also say this is in one day, but more than likely this plays out over a period of time. And you can see from right here to right here, you didn't have to catch it in one day. You just waited and you had plenty of time. So let's say, okay, I missed this move, but you end up waiting 30 days and you got $50 more. So adding on to the $200 that you initially had, that's $250. And right now, currently, we only spent 30, 50, that's 80, plus 60, that's 140, meaning 250 minus 140 equals $110. Now you then caught your investment at a 23% discount. Oh my goodness. Now you got $110 that you can risk to lose, and this is where, when your strategy plays out at the ending of my strategy, which is the point of investing, you know what I'm saying? Watch. And excuse me, cat back here meowing and stuff. The point of depreciation percentage that I want, and I'm saying, okay, this is it. This is the price that I wanted to go to for real initially, but I invested at this price because I never know. What if it just reversed and just went to the moon? What if it just reversed and went to the moon? What if it just reversed and went to the moon? But we know that's not how things work. So that's just an example. Now we're going to say we waited to right here and we got another opportunity to invest at a 23% depreciation value of this price right here. From the top to the bottom, this move is 23%, and I can show you. Boom. So that means in 28 days you had one opportunity in one day, but over the course of 28 days you had another opportunity for the same exact price. And you should be working and doing something to make some money. So what I'm gonna do is I'm gonna put the rest of my money that I have to invest, which is $110, at that 23% depreciation value price of the asset, or whatever percentage depreciation value price that you have for your investment strategy. Mine only goes to about 25%. I'm not gonna risk trying to catch a 30% off, 40% off, 50% off. It happens in the market, but it's not realistic for investing. It happens, but it's not realistic. So now that I've been able to get $50 more over the 28 days that I can risk to lose, I'm going to back the truck up and dump it into the market. And now, since I have completed my investment strategy of buying at 5% of a depreciation value, buying at 10% of a depreciation value, buying at 15% of a depreciation value, and buying at 23%, 20 to 25% of a depreciation value, okay, I'm done investing. I'm tapped out, no more liquidity, and all I can do is hope for the best. Now, Fortunately, this played out in your favor, but it takes patience. And guess how long it took? 57 days. Boom. And let me get my chart a little bit smaller for you all. "57 days, yada yada." Let me do it right, because people are going to complain about it. Let me do it right. Let me do it right. I wish this thing would just get out of my way right here. Jeez. Hold on. I got you, y'all. Stay with me here. Stay with me. So we got another opportunity to invest at that 23% price. We're going to stretch this out like you should be stretching your money. And let's say, okay, I only want to make $15% gain on my investment. Now, and we're going to say I only want to make 15% from this price right here. The price that you started investing in right here, excuse me. The first price. You're going to make more than 15% if you invest like this, going down at your lowest depreciation value. By the time you get back up to the price where you initially invested at, you're already up 23%. That's the crazy part about this. That's the crazy part. That's why you want to put more money at a lower price point of your investment strategy. Now, let's just say we only want to make 15% from our initial investment strategy, and whatever we make from this is just extra. Boom. So 15%. 15%. Let's see how long it took. This right here is where we got to 15%. Boom. 63 days to make 15% on your initial investment. So the next video that I make is going to be even more technical, because I'm going to show you all how to calculate all of these percentages, because it's not a compounding percentage, it is a average percentage. And we're going to go deeper into the investment strategy of even figuring out how many tokens you bought at this price level, how many tokens you bought at this price level, how many tokens you bought at this price level, and this one. And then we're going to average out all the token prices and the tokens that we got. We're going to do some simple math. Simple math. Now, let's go back to this strategy that we're talking about, the strategy that we formed before we even got into the market. So now what you want to do is say, before you start investing, I only want to make 15% from my 5% entry point. So boom, it only took you 63 days to make your 15%. Where else in the world are you making 15% on any investment and on any bank account? Well, let's not say any investment. On any bank account, on anything that you do in your regular day, that you don't flip, that you're not doubling or flipping your money, doing something like selling resale furniture or something like that. Where else are you making 15%? Your money is in the bank making 0.008% interest a year, not a month, a year. So this is why it's super important to understand investment strategy. You cannot go into the market and just throw money into the market and be like, well, I've seen somebody else make $1 million because they just do it and they just aped in. No. Forget that. Forget that one lucky freaking unicorn. We're not trying to be lucky. We're trying to calculate and make the best moves for ourselves. And sometimes the best move for yourself may be just going with your gut. But why go with your, and not say not to go against your gut, but why go off of emotion when you can just have a plan, a strategic plan that is going to guarantee you, if things do go in your favor, guarantee you returns. Because the token can crash and go to $0 right now, 0 cents. You can be in even more drawdown, and this is what this is called. When you invest right here and you're losing money, we call that drawdown. That's what I call it, drawdown. So, and you see when I say I only wanted 15% on the money, I didn't say that I want to make $100. I didn't say that I want to make 100 XRP. I didn't say that anything about a money value at all. I said about percentage gain. Percentage gain is key, because if you say you want to invest 250, your mind is like, okay, I need to triple this up. I need to make 300%. Do you know how unrealistic even trying to make 100% on an investment is? Do you know how unrealistic that is? That's why your bank account only gives you 0.008% interest, because they know they can pay that. Anything over that, and even in a CD account, you get 3 to 5% interest guaranteed, because they know they can make that guaranteed. The market, these people got so much money that they only want to make 1 to 2% a trade. If you can make 1 to 2% of every single freaking trade, do you know how much money that you would just be making just off of 1%, 2%? Do you know how many percentages that compounds up? So say for instance, if I made 50 trades on 1% and I won all 50 trades, which is not realistic, but it can happen. We're just gonna use the best example possible. I made 50 trades at 1%, but when you add the money up and you add the percentages up, you made 50% in a day on your investments. And who's to say that, okay, 51% on $2 is not the same, it's not the same monetary value as 1% on $1. It's not the same thing. But if you total up the percentages over 50 trades, 1% each trade, and you win all those trades, hypothetically, which probably will never happen, you done made 50% in a day. And this is how these institutions make their money. They don't go into the market and say, I want to make 63% today, and I'm going to just do one trade. I'm going to only do one trade and make 63% on my trade. No, they're going to do 100 trades. They're going to fail on 40 of them, and they're going to win on 60 of them. And it can be reversed. And they're only going after 1%. They're only going after 1%. So even with that, 60% is ridiculous. But let me break it down a little bit more for you. You can make 100 trades and only win 10, and the money and percentages that you make from 10 trades winning and losing 90 trades will be greater than the money and percentages that you lost from the 90 trades, because trading at the end of the day is about risk to reward ratio. If I make a trade, and this is why this is so important to learn the Forex market before you get into this Forex market, the XRP ledger, which is a foreign exchange blockchain. That's what it's for, foreign exchange, digital foreign exchange money. That's literally what it's for. That's why I love this asset. It's so significant because it's literally the same thing that I've been learning over the last couple of years. Foreign exchange is what it deals with, currencies. So if I lose 90 trades and only lose 0.01% of those 90 trades, let's add it up, 0.01% on 90 trades, it's going to be 9% loss. But if I win 10 trades at 1%, I won 10%. I made 10% on my money. For that day, you lost 90 trades, but you still come out on top at 1% on your investments. You won. Now let's go even further. If on those trades, I wanted to get a 2% gain off of my investments. So I can lose 90 trades and at 0.1% because my risk to reward ratio is super tight. I have a plan for that. I know that I'm going into the market to lose this amount of money to try to gain 2%. I'm willing to lose 0.01% on a trade, whatever type of money that is, because at different monetary values, that number is going to change. I'm willing to lose 0.1% over 90 trades to win 10 trades that win me 2% on those 10 trades. So that means on those 10 trades, you made 20%. I think the word is commutatively or something like. I don't know. I'm not a freaking scholar. I understand this type of stuff though. But you won 20% and you lost 9%, so you won 11%. You made 11% on your investments. But I don't want to get too deep on this one because we're going to have to break it down again. And I think I went a little bit too far, to be honest. But it's simple. It's so simple. You need a strategy. And once you have a strategy, you can invest when you need to, turn on your alerts, price point, okay, price point here, and go live your freaking life. The worst people, the worst traders are people who stare at the charts every single day. It does help people if you're really in tune to it, but it also starts to bring emotional attachment to the market. And you don't want to get attached to money, so you don't want to sit here and watch your money all the freaking time. It's very simple, you all. It's very simple. So I gave you all an investment strategy. It's not financial advice. I dropped out of college. I was homeless, so that means I wasn't making money. I would not listen to me because I don't know what I'm talking about at all. I'm not a financial advisor. This video is for educational purposes only and to show examples of how things possibly work. I don't know. I don't control it, so I actually don't know how it works. But we have to stop blaming Ripple. To reiterate on my first point, we have to stop blaming Ripple. We have to stop blaming Ripple. Because they don't control the freaking market. They don't control this market. They don't. And if they do, who cares? Because you have more than enough opportunity to win in this market with a strategic plan. I'll say this last thing. The reason that most people in their life don't become successful or even, cross the barriers that they want is because you're not planning your life. If you don't have a plan in real life to get somewhere and you just think it's going to happen overnight, you're going to become the best electrician overnight. You're going to become the best ballerina overnight. You're going to become the best chef overnight. You need to go look in the mirror, wash your face, and say, oh, yeah, I washed my face. I thought that was somebody else. I'm still tripping. Because you're tripping. You're tripping. I can't learn how to code a blockchain in one day. It takes time. So you won't be able to learn how to invest and be successful at investing overnight. It takes time. It takes strategy. It takes discipline. It takes knowing when to hop in at your price points for the opportunity that you're looking for. And I say your, just a St. Louis thing, man. You know what I'm saying? I'm from the Midwest, so I talk with a little twang. I be talking real proper, but at the same time, you know what I'm saying? Got a little country in me, got a little hood swag in me too, you know what I'm saying? But let's get back to the point. Let's get back to the point. You have to focus on what you are looking for out of this market, not another company. I don't care that Ripple has all that money. The only reason that I would care that they have all that money and all the resources is because I want to buy their stock. That's the only reason I care. But outside of me caring to try to make money for myself, who cares what Ripple is doing? That's a whole nother company that you don't control. But you can control this. You can control when you invest. You can control when you take profit. But most people lose even when they are in profit because they don't have the ability, nor do they have a strategy in place that they stick by to take the profit. You want to make $100 million off in investing $24. It's not going to work. You're lucky to make $24 off of investing $24. You don't understand the value of a penny. So when you make your pennies, you say, that's not enough. And sometimes the pennies add up to more than what you make per hour on your job. And you still just say, that's not enough. They said it can go up to $500 and it's at 68 cents. I'm going to wait. And then you lose your money. You get impatient because it's not moving fast enough. Then you sell at a loss. And then it finally starts to move up again right after you sell. Because everything is connected, man. This is a deeper thing. Everything is connected, even with the thoughts of how you think with this market. The market is going to move on an algorithm. Algorithm is made from our thoughts. Literally. Without our thoughts, the algorithm would never be created. It would not know how to think for itself and how to operate. Without our thoughts, we created the algorithm. And now the algorithm understands how we think. And that's why you have the markets moving in trends and swings. It's an algorithm. Learn the algorithm. Literally, be one with the algorithm. If you could see my screen and how I was moving, I'm moving my hands like I'm in a freaking the ocean. Ride the wave. Ride the wave. You're going to crash. But that's when you need to pick yourself up and go, I got a life vest on. Let's go back up. I got my life vest on. We good. We going to float to the top. It's crashing. Opportunity. It's crashing. Opportunity. Made my 10%. Get out the market. Made my 15%. Get out the market. Look for the next one. I digress. I think this is a great video for people though that are very interested in just figuring out the basics of what they want to do. We're not doing any price predictions because this is just about investing strategies. Once again, I'm not a financial advisor. This is Fiction Crypto. You all have a great day. Peace.